Herzlich willkommen im Energiestudio. Einen schönen guten Morgen. Es freut mich, dass Sie hier bei uns sind. Wir schauen uns heute erneut mit der Internationalen Energieagentur, mit unseren beiden Referenten Jean-Baptiste und Greg Molnar, den Gas Market Report an. Seitdem wir uns das letzte Mal gesehen haben, das war eine Woche bevor der russische Angriffskrieg begann, hat sich einiges geändert und wir sind sehr gespannt, was uns Jean-Baptiste und Greg nun zu den Zahlen im Gasmarkt sagen werden. Bevor ich direkt an die beiden weitergebe, möchte ich kurz 2, 3 technische Hinweise mitgeben. Die Veranstaltung wird wie gewohnt aufgezeichnet. Im Nachgang finden Sie die Veranstaltung dann auf unserem YouTube-Kanal und wir schicken sie Ihnen gemeinsam mit der Präsentation und dem Gas Market Report zu. Wenn Sie Fragen haben, können Sie die bereits während der Präsentation in den Chat stellen, gerne auf Englisch. Und wir werden dann die ganzen Fragen sammeln und am Ende an die beiden Referenten weitergeben. And now I will switch to English. I'm very happy to have you here, Jean-Baptiste and Greg. This is the 5th time that we have you here presenting the gas market report to us. And it's been a year and a lot has changed. In the beginning, we looked a lot on COVID and now on a lot of other things. So I would like to give you the floor now, and we are very excited to see what is going on the gas markets.
Thank you very much. Good morning. Thanks a lot, Ann-Kristin, and thanks to our colleagues and friends from Zukunft Gas for hosting us again today. My name is Jean-Baptiste. I'm Senior Gas Analyst at the International Energy Agency. It's a pleasure to be with you today, my colleague Greg Molnar, to present you the findings from our latest quarterly gas market report. As you rightly said, there's been some changes in the gas industry and more globally, fortunately, since we had our last conversation 3 months ago. And the purpose of this presentation is to go through some of those big impacting changes that have occurred and what could be their foreseeable, if any, can be foreseen in the great uncertainty we're living currently in the coming months and for the rest of the year. So to begin with, this is something I guess all of you are familiar with. This is the evolution of gas prices globally, taken through 3 main price benchmarks in Europe, Asia, and North America, as we've seen them over the past year or so. And it has been already a period of strong high prices and high volatility in Europe, and by extension in Asia, since the beginning of the heating season last year. But of course, the invasion of Ukraine by Russia on the 24th of February has triggered new highs in terms of prices. As you can see, we have seen new all-time records being broken at the beginning of the month of March in Europe, which have in turn triggered new all-time high prices on the spot market in the Asian markets. Prices have slightly come down from their peaks of March as we speak, beginning of May, but they remain both very high and exceptionally volatile, as we see from a day-to-day basis. Before going back to the specific European situation, I'd like to get a bit of a focus on other markets to show the global outreach of the current crisis that we're seeing. First, here on this figure, you see the evolution of prices on key Asia-Pacific natural gas markets, whether it be importing markets such as Japan or India, or exporting markets such as Australia. As you can see, since the past winter and the start of the invasion of Ukraine, we have seen similar moves, very strong, sharp increases in all those markets. For different regions, of course, the price scarcity, especially of LNG, which is being massively move to Europe as Europe becomes the so-called premium market for LNG, but also a combination of local factors which are resulting from the recovery of the markets that we've seen last year and several issues in terms of supply outages. We haven't been able to put together all the figures for April because they're not still available for all those markets, but the preliminary figure for prices in those Asia-Pacific markets show a further increase in the past month of April, whether it be in important markets. As you know, for instance, in India, the situation is particularly dire because of acute power shortages linked to coal supply outages, which has pushed for further increase in marginal role of gas in power generation. And even in Australia, which is a major exporter of natural gas, outages from the coal-fired generation fleet combined with a heat wave has caused very strong hikes in power prices and by extension of natural gas prices. Another market of interest outside of Europe is the North American market, and particularly the United States. Here also, we're in a situation of a major producing and now exporting gas and LNG market, but which also sees a period of strong increase in prices. As you can see, prices have nearly doubled since mid-February. I've reached recently around above $8 per MMBTU, which is a very strong price signal for the United States. The link with the conflict and the invasion of Ukraine is less direct, of course. The United States is not importing gas either from Russia or from any other major exporting country, but it's a combination of dynamic domestic demand, which has been pushed by power generation increase on the wake of coal shortages. On the one hand, also a combination of weather-related events. We're in a shoulder month situation where we still have cold temperatures in the north of the country and very hot temperatures in the south of the country, which pushes both heating needs in the north and power generation need for air conditioning in the south, combined with, of course, a very dynamic export-driven demand for US natural gas. So the situation globally is one of a very tight market for natural gas. If we go back a bit to what we had seen over the past month, particularly over the past year, the picture you have here on the left is the evolution of gas demand globally according to our latest estimates on a quarterly basis. As you can see, it's really a year in two halves. We had the first half of the year, which was clearly a strong recovery from the lockdowns of 2020 and a rebound of the global economy. We had 6% increase globally in terms of global gas consumption in Q1 2021, over 8% in Q2. Again, recovering from the brunt of the lockdowns of 2020, but very quickly, this growth rate collapses to about 3% in Q3 and about 1% in Q4. So it's a combination of the waning effects of the recovery and also, of course, the impact of the high gas prices on the different markets, as you just saw on the previous slides. Those high prices have not only triggered a low growth in terms of gas demand, it also has impact in terms of substitution, especially in power generation, to the benefit of coal, to the benefit of oil products in some markets. It also has triggered some demand destruction, particularly in price-sensitive markets, such as industrial customers. This is illustrated on the right-hand side figure, where you can see the monthly year-on-year evolution of consumption for industry customers in a basket of major gas-consuming markets. You have the United States, China, Western Europe, and India. And as you can see, the first half of 2021 with a very strong increase, which turned into negative growth from the month of September. That negative growth coming from all the major markets, including the formerly used fast-growing markets. If you look at the Chinese numbers, particularly apart from the outlier in the month of February, we've had a negative contribution from China since September last year. Switching now to the supply part, and particularly to the role of liquefied natural gas. This is something that, if you follow IEA publications, something that we regularly emphasize, the strong contribution of global LNG as an enabler of diversity of supply, but also flexibility of supply. Of course, what we have seen over the past years, more particularly over the past months, makes no exception to that rule. So on this graph, you can see the black line shows the evolution of global LNG trade per month, and a billion cubic meter per day equivalent on the right-hand side scale. And it really shows that from mid-2021 till the end of the year, we had a very strong upswing in terms of production and energy export capacity, which enabled to sustain the thirst for gas in the last month of 2021. The situation, as we see it in Q1 2022, LNG trade grew by about 7% compared to the previous year. What is also interesting to note is the evolution of trade per main destination, and those are the three main areas that you see on the figure. So the bottom blue area is Asia, which still has a dominant role in terms of numbers, but you see that its contribution has been declining constantly since mid-2021, and so have other markets, the red area at the top. Those other markets, principally driven by the Southern American markets, particularly in Brazil, which suffered its strongest drought season ever recorded last year, which has led to a strong need for backup gas-fired electricity generation to compensate for the low hydroelectricity levels. The situation has led to a tension during the summer month, and the share of Europe, as you can see in the middle of the figure, has been pinched, and it has strongly expanded since summer last year, and you see it's constantly expanding over the past month as the supply crisis unfolds. So I would like now to give the floor to my colleague Gege, who will guide you through all the details of the European situation.
Many thanks, Jean-Baptiste. My name is Gergely Molnár. I'm a gas analyst at the International Energy Agency. And first of all, I would like to join Jean-Baptiste in thanking Zukunft Gas for hosting us today. It is always a pleasure to discuss recent gas market developments on this platform. As noted, Europe has been really at the epicenter of the market turmoil, which has been taking place in the last couple of months and has intensified following Russia's brutal invasion of Ukraine. So in the next couple of slides, we will give a brief overview of recent market dynamics during the heating season and present our short-term forecast for 2022. So if we are going to the next slide, we will see that European gas consumption has been declining during the heating season by approximately 4% year on year. And this has been really driven by all sectors. On the first graph, we can see the estimated daily distribution network related demand in Europe, most of which is used in the residential and commercial sectors for space heating purposes. And as such, this is quite temperature sensitive demand. In contrast with the previous heating seasons, when Europe faced several cold spells, this winter weather was milder than usual, with actually a couple of warm spells occurring at the beginning of the year and in the first half of March. Consequently, distribution network-related demand fell by around 5% during the heating season, and it plummeted by almost 10% in the first quarter of 2022. The second graph shows the year-on-year change in power generation by source. And what is quite interesting to see here is that despite the record high gas prices, gas-fired power generation has remained rather resilient and actually grew by 1%. And this is partly because we had a very low hydro generation, also nuclear was down. And of course, this created some market space for coal and gas-fired power generation, especially for gas-fired generation in the southern European markets where with limited coal-fired generation, such as Spain or Italy. In contrast, in Northwest Europe and as well as Central and Eastern Europe, we have seen considerable gas-to-coal switching, with coal-fired generation rising by 15%, while gas-based output fell by 7% year-on-year. And the last graph shows the estimated year-on-year change in industrial gas demand, which fell by approximately 6% over the heating season and plummeted by almost 9% in the first quarter of 2022. We see that that these very high gas prices are practically suffocating the industrial activity in the most energy and gas intensive sectors, where we have seen production curtailments and even temporary shut-ins. If we are going to the next slide, we will see how the European gas supply dynamics evolved during the heating season. I think that here the key point is the red bar, how Russia behaved. Despite available supply and transport capacity, as well as high revenue potential, Russia reduced its piped gas supplies to Europe by close to 25% year-on-year during the 2021-22 heating season. And of course, this further exacerbated market tightness drove up gas prices to record highs and fueled price volatility. In contrast with Russia, all other suppliers were ramping up their deliveries. Algeria increased its exports via the Transmed and Medgas pipelines by almost 10%, although the non-availability of the Maghreb-Europe pipeline and lower flows from Libya depressed overall flows from North Africa. When we are looking at Norway, we see that it increased its deliveries to the rest of the European continent by almost 8%, with the country's export facilities running close to their nameplate capacity. And it was also very handy to have the TAP pipeline, which delivered about 4 BCM of additional gas into the European market during the heating season. But as we can see on this graph, it has been really LNG which has been doing the heavy lifting. LNG inflows surged to Europe by 55% year-on-year to reach 75 BCM during the heating season, which is an all-time high for this period of the year. And notably, almost 2/3 of the incremental LNG was supplied by the United States, which reinforced its position as Europe's largest energy supplier. On the next slide, we present our forecast for 2022, and we foresee that European gas demand will decline by close to 6% this year and will fall back practically to its 2020 levels. One component of this picture is, of course, the lower space heating requirements in the residential and commercial sectors. And this already reflects the drop in Q1 and includes the assumption that we will have average weather conditions for the rest of the year, somewhat in contrast with 2021, when Europe faced particularly long heating season extending into the second quarter. Gas to power demand is expected to decline by close to 5%. On one hand, the rapid expansion of renewables is set to weigh on the overall power generation, while the continuing high gas price environment is set to put gas-fired power plants at a disadvantage vis-à-vis coal-fired power plants. And of course, these record high gas prices are weighing on industrial gas demand, which is expected now to fall back to its 2020 levels. But of course, one major component of the summer gas demand, which should not be overlooked, is gas storage injections. And if we move to the next slide, we will see that, that this year, in order to reach the 80% fill target of the European Union, net injections will need to increase by approximately 6 BCM above last year levels. And of course, this will create further demand and further competition for LNG during the summer season. And here, maybe just to note that a number of EU countries has set higher injection targets than 80%, including Belgium, France, Germany, but also Italy and Poland. And as such, we could see that there will be even higher injection demand this summer, as showcased on this graph. If we move to the next slide, we will see how the supply picture is expected to evolve. In terms of domestic gas production, we expect an increase of approximately 3% compared to 2021. And this will be driven by higher output in Norway and the United Kingdom. In both countries, we had a quite heavy maintenance in 2021, and this is not something we expect to repeat this year. But despite lower domestic consumption and higher production, we still expect that Europe's gas import requirements are going to remain close to their 2021 levels, mainly because of the higher storage injection needs. So considering the booked and available capacities, Russian piped gas flows are expected to fall by over 17% year-on-year in 2022. And maybe to note that there are substantial downside risks around that projection, also in light of the recent developments when Gazprom unilaterally cut supplies to Bulgaria and Poland. I think that here, again, really the big moving part is LNG, and we foresee that European LNG imports will increase by about 25 BCM year on year to hit an all-time record this year. And of course, this is mainly because Europe has become a premium market for LNG, attracting cargoes away from Asia. On the next slide, we would like just to note that in the face of the emerging global energy crisis triggered by Russia's invasion of Ukraine, the International Energy Agency has developed two 10-point plans with actionable measures which can reduce reliance on oil and natural gas already in the short term. in our 10-point plan on gas, we identified a number of supply and demand side measures which would allow the European Union to reduce its reliance on Russian gas supplies by over 1/3 or 50 BCM within 1 year. And what is notable here is that we see that this is pretty much working on the supply side because this would, of course, necessitate a strong ramp up of LNG imports. We see this happening, as well as we see the inflow of non-Russian pipe gas into the EU. But what we don't necessarily see is that the actions which should be taken on the demand side, and this includes a more rapid deployment of renewables, a higher utilization of existing low emission generations such as biomass and nuclear, as well as a range of demand side measures, including installation of heat pumps, energy efficiency, and temperature control. And as we noted in our 10-point plan, this should be really about focusing both on the supply and on the demand side. We see that more action and more immediate action is needed on the demand side to reduce as fast as possible the share of Russian gas in the gas supply of the European Union. I would like to thank you for your attention and giving back the floor to Jean-Baptiste. Thank you.
Thanks, Gergely. So I'd like to close this presentation with opening the outlook to the global dimension. And first, to bounce back on what Gergely just showed you on the impact of reducing Europe's dependence on Russian gas, of course, has an impact on the overall LNG trade in a situation where this year and the coming years, we will not see plenty of new LNG capacity being commissioned as the market we're used to over the past 5 years, because this investment cycle that had started in the mid 2000s until the early 2010s is now coming to an end, and the next cycle is about to deliver in a couple of years. So the coming three years are likely to be limited increase of LNG capacity. Our estimate for this year is less than 30 billion cubic meters of increase of capacity coming from new projects being commissioned, mainly in the United States, but also from the progressive recovery of existing infrastructure, which were hampered by unplanned outages over the past year. As you can see on the demand side, the assumption we've taken in terms of replacing part of the Russian gas with LNG imports makes it that Europe has the lion's share in terms of global LNG trade increase for this year, about 80% of that coming to Europe. The increment is also being split with Asian market, China, India, other markets, while we see other regions see their intake of LNG declining compared to last year. This mainly owes to an improving situation in Southern America after the very dry season that we've seen last year, which leads to lower needs from LNG imports. The global picture in terms of global gas consumption is also being affected, of course. Gergely explained the situation for Europe. This is something that we already anticipated in the previous edition of our quarterly gas market report before the beginning of the invasion. The picture was already on a negative trend, mainly because of the non-recurring components of the growth that we've seen in 2021, namely weather-related growth in 2021 with a long heating season and the situation we're seeing this year and the expectation of a average weather condition for the rest of this year has a strong role, of course. But the evolution of the global gas markets, the impacts of the invasion of Ukraine, both in terms of availability of supply and price of supply, also triggering further downwards revisions. And as you can see on these figures, we have plotted the 2022 demand increases for gas consumption as we saw it in the previous edition of the gas market report back in January. And what we have from the latest edition published less than a month ago. And we're shifting from a modest, what was perceived as a modest increase, about 1% increase from the previous forecast, which comes after 4.5% increase in 2021. So it's a cooling down of the situation to something becoming increasingly negative. Our current view is that global gas consumption will decline by about 0.3% this year, about minus 10 billion cubic meters. So that's a difference of 50 billion cubic meters compared to the previous forecast for 2022. If you look at the breakdown per region, already mentioned the role of Europe, so that was already negative. As Gerge mentioned, the impact of the conflict, especially on price-sensitive sectors, is dragging this downwards trend even further. This is the same situation for the Eurasian market, and we're also seeing a strong downwards potential for the Asia-Pacific market, which is still expected to grow, but more or less half of what was previously expected. We're also seeing some less important impacts for other regions, whether it be Africa, Latin America, North America, but these regions are, for most of them, self-sufficient, so the impact and the link with international trade is less important. One quick word to close this presentation on the wider impact of the invasion of Ukraine and the global crisis that has triggered. We have looked at the direct impacts on the gas balance. There are also some second and less immediate impacts to be considered. First one you can see on your left is the impacts for the use of gas as a feedstock for non-energy purposes, thinking in particular the role of gas as a main input for the fertilizer industry. Gas accounts for about 70% of input for the production of ammonia, which is the main feedstock for fertilizers globally. Now, as you can see on the figure, the price of urea, which is the base nitrogen-based fertilizer product, has seen very strong increase, of course, last year with shortage situation in several markets, but further increasing since the beginning of the conflict in Ukraine. It has increased by about 20% over the past 2 months and is likely to further increase. So the current security of energy supply situation that we are seeing is turning slowly, but unfortunately, into a security of food supply situation in several exposed markets, such as India or Brazil, which are seeing both very high prices for fertilizers and physical supply shortage issues. The second impact is, of course, on the global economy, which is illustrated on the right-hand side. The impact of the invasion has been mainly visible on energy commodities, but the whole spectrum of commodities being impacted. You can see on the figure that all the base commodities have seen their price level increase since the beginning of the crisis. Food, raw materials, base metals have all been increasing, fueling inflation and having further negative impacts on the global economy. I'd like to thank you very much for your attention. Thanks again for being with us today. And I think that this finishes the presentation, and I'll be happy to open a Q&A session with you. Thanks again.
Thank you, Jean-Baptiste. Particularly your last slide showed again how much natural gas is on the basis of a lot of things that we use in our daily life, and how the high gas prices will continue to impact all of our life, not just in the energy business. Thank you for showing this to us. So now we can take questions. I've already seen one question in the chat. Please feel free to continue posting some. In the meanwhile, I wanted to ask, Greg, you talked about the sharp decline of gas in 2022, and particularly in the residential sector. What is this based? How can we decline so much in the residential sector in the EU?
Thank you, Ann-Kristin. I think, this is, unfortunately, this is not because there have been a lot of energy efficiency measures implemented. It is just, a reflection of how temperature sensitive are those sectors. I think that when we are looking back at 2021, one of the interesting components of that year was that we had a particularly long heating season in Northwest Europe, lasting into April, but even in certain regions, even until May. And of course, we don't see this to repeat itself each and every year. I think it might be mistaken, but I think in Germany it was the coldest April in 40 years. We don't expect this to repeat each and every year. So I think that this is what it is mainly about. I think in a preferred scenario, it would be, also linked to the implementation of energy efficiency measures on changes in behavior, how we use our energy. And also, I think that we should, and policymakers should, look at the effect of double heating, something we have seen during the lockdowns, when people heated both their home offices and their traditional offices have been also heated. So these are, some of the shorter measures which could be also looked at.
All right. Thank you very much for that answer. I would like to talk a bit about the LNG supplies. You have shown that Europe is now the epicenter of the LNG markets and became a hub for main imports. How was this last year? Was Europe already having such a large share of LNG in the market? And also, I wanted to ask, who are the other suppliers of LNG? We saw that 2/3 are supplied by the US. What are the other big players here?
Well, the situation in Europe has been evolving quite quickly over the past season. And at the beginning of 2021, the previous winter, we had some cold spells in North Asia, which really drove the LNG demand there. And then it was followed by the very dry spring season in Latin America, which also has pushed some of the LNG in the Latin American markets. So the role of Europe really started to expand during the mid-season last year. It's been expanding ever since. We have reaching record levels in terms of LNG inflows to Europe. In terms of supply, looking at Europe, the United States is definitely the strongest supplier and a quick game changer in terms of additional supply availability over the past month. The other big players globally remain the same. We have Qatar, which has this ability to switch from one market to another, given its geographical position at the intersection of the Atlantic and the Pacific basins. So it's playing both on the Asian market and the European market. with a bit less flexibility, because in the LNG markets there are differences in between contracts which allow for flexibility of destination and contracts which do not allow for flexibility of destination. And of course, at the other side of the globe, Australia is also a very strong dominant player in terms of LNG supply. But Australian LNG is not reaching the European market yet. And we have, of course, other suppliers, more traditional suppliers, whether it be in Africa or in Asia. We also have had several of those suppliers which have been hampered over the past months by technical issues or feed gas issues in Nigeria and Trinidad and Tobago and Norway, Algeria, which have limited their ability to react to the uptick in demand that we've seen in 2021.
I would like to come back to Qatar, and particularly how do you judge the potential of Qatar to increase its LNG exports volumes over the next years? What do you say?
Well, Qatar has already a major expansion project on the way, which is expected to deliver in the next 4 years. But Qatar has been delivering at its maximum capacity over the past years. It has been the major player on the market for more than a decade now. It has been joined first by Australia and now by the United States, but Qatar has plateaued its capacity already for several years. And the next step for Qatar is now to be able to further increase its capacity with this expansion.
Okay, so let's come back to the topic of Russia. Our first question in the chat was if Russia delivered its gas in quantity, quality, and price according to the contracts to the European Union, not talking about the recent developments of supply in Bulgaria and Poland.
So, thank you for that question. I think that, based on the public statements made both by Gazprom's European customers and Gazprom itself, the long-term contractual commitments have been honored. Now, I think that what is quite important to note is that despite the very high gas price environment, which has emerged already in the third quarter of 2021, Gazprom has gradually reduced its short-term supply deliveries, both to the European hubs and via its electronic sales platform. In fact, Gazprom has seized all short-term options on that platform starting from October and haven't restarted them. So obviously this is putting additional pressures on the market. And then I think that there is also a question on what does it mean to meet long-term supply commitments. But of course, due to the fact that those are commercially sensitive questions, we would not comment on this occasion on that point. Thank you.
Thank you for your answer, Greg. So we have another question on LNG and how big is the share of fracked gas in the LNG mix that comes to Europe from the US? Do you know this?
Well, it's as soon as gas is put into an integrated pipeline system, you can't track the molecule. So it's a bit difficult to say how much is coming from which source. But gas coming from tight deposits or shale deposits currently already accounts for the vast majority of the US supply. So as a measure, I would say that if you account for the same ratios, the majority of the LNG supply to Europe from the United States comes from the so-called unconventional shale gas, tight gas deposits.
Thank you for this answer. Let's go to our last question that we have in the chat. It is about hydrogen and whether the current record gas prices are impacting the ramp up for renewable hydrogen vis-à-vis decarbonized or fossil hydrogen.
Well, it is one of the aspects, certainly. Providing green gas sources, whether it be hydrogen, low carbon hydrogen, or biomethane, is of course one alternative to fossil gas that is becoming increasingly competitive in the current price situation, but also has further advantages in terms of reducing dependency on imports, turning imported fuel into domestically manufactured fuel, and also, of course, reducing the footprint of the combustion of those gases compared to fossil fuel.
Heiko Lohmann has raised his hand, so if you want to ask a question, please go ahead.
Yeah, hello. Thanks to both of you for your presentation. I have two questions concerning the LNG supplies for 2022. First, you said you expect or see that Europe can raise the demand by 25 BCM. The EU said it is optimistic to be able to secure 50 BCM of additional LNG supplies or demand, for Europe. That means you think that is unrealistic. And B, can you say a bit about what you expect or what you assumed for prices for 2022 as a as a price for global markets, let's say Europe and JKM? Will it stay in a range that we currently see, or do you see a bit of downside or even upside because the market remains tight? Thank you very much.
Heiko, thank you very much for these very relevant questions. I would start with the second one in terms of pricing. As you might know, the International Energy Agency does not provide price forecasts. We typically rely on the forward curve for short and medium term forecasts. And the forward curve at time have been showing a spread between JKM and TTF for the premium of TTF, which has been around $3 per MMBTU. Now, since then, in the last couple of weeks, the premium between so TTF's premium have widened significantly to JKM. It is now around $9 to $10 per MMBTU, and this just really shows the strength of the European market in terms of pool of energy volumes. And I think that this is intimately related to your first question around the LNG import forecast into Europe and into the European Union. So I think that there is a difference between our forecast, which does not assume a complete shut of Russian gas supplies. As we noted in the presentation, at the time we assumed a decline of 17% year-on-year in Russian gas supplies based on the booked capacity and available capacity on the main supply routes. But of course, there is a downside risk to that. There is a significant downside risk to that. And in that case, Europe will need to ramp up further its LNG imports. By how much? I think that it will depend on two factors. One is the remaining spare gas capacity in Europe. And as we speak, we note that there is very limited spare gasification capacity left in certain parts of Europe, mainly in Northwest Europe. We see that all the major terminals are running at nameplate capacity, and also the interconnectors from the UK to the EU are also maxed out. And this is, of course, also driving the disconnection of prices on TTF and NBP. Just to note that NBP last week traded 40 euro per megawatt hours discount to TTF. We have never seen such price discrepancy. Now, so I think that there is one question about the ability on the infrastructure, how much additional energy can be absorbed, and the second is related to the flexibility of the energy market. And this flexibility is also partly linked to the developments in Asia. And here, I think that a very important factor to note is what is happening in China. The widespread lockdowns in China are weighing severely on gas consumption in the country. We have seen in April, China's energy imports plummeting by 30% year on year. This has never been seen. And obviously, this is also providing some additional flexibility to the energy market. And Europe is in some way benefiting from that. So to respond to your question, I think that there is further room from the 25 BCM forecast. But also, I think that the flexibility of the energy market is not infinite as it might be seen these days, because demand can again gain strengths in Northeast Asia. They also will need to restock ahead of the winter, and we might see these dynamics re-emerging in the second half of the year. Thank you.
And we have another question regarding LNG terminals, and particularly FSRUs, and if you deem them to be necessary investments to take some pressure off from the market. We are planning some in Germany. I'm not sure, maybe you can elaborate if other countries in the EU are planning this too. And how do you deem them, and also if maybe there are other approaches like additional gas deliveries by other expansions, and if efficiency measures are more prudent than FSRUs?
Well, FSRUs have always been used as a fast-track approach to deliver LNG to markets. Been used in the past in situation where markets were short on gas, whether it be in Egypt or in Chile or in Argentina. So they have clearly the advantage of facilitating access to the market in a limited amount of time. And FSRUs are not designed to be long-term solutions. So I think that in the short run, they have a contribution. You mentioned the projects in Germany. There are other projects in the Netherlands, in Italy, and in other markets. Are thinking of, and Greece also mentioned with Bulgaria, some interest in hiring FSRUs to fast track their access to new sources of gas. Of course, in the medium to longer term, we don't have to forget that the European Union is on a track to net zero emissions, to reduce its footprint, to decarbonize its economy. So, of course, replacement of one source of fossil fuel, fossil gas from another source of fossil gas is part of the short-term answer, but the long-term answer lies with the decarbonization of the European energy system, and also, of course, in energy efficiency to reduce the consumption of energy that we currently consume.
Thank you very much, Jean-Baptiste. Thank you very much, Greg. We had a lot of fruitful insights today, and we're looking forward to the next presentation, hopefully with less turmoils then. Until then, I wish you a good day and see you soon. Bye.